Students, today we're going to be talking about credit and loans, so please find that assignment in Canvas. These are two super important concepts we're going to be talking about as it applies to personal finance. This is hopefully to give you a leg up on maybe some of your peers who might not know as much information about this. As high school kids, you're going to really be expected to know this type of thing in the next few years, or these types of personal finances within the next few years. Once you turn 18, all of this becomes super real. It becomes very apparent the types of things that you can get, why you're able to get the things that you can get, why some people are not able to get those things, and how they can ultimately affect your financial well-being, especially after you turn 18 years old. And I lump these two things together just because even though they're two different ideas or concepts or topics, they are super important or hyper related in terms of how we think about personal finance. So we'll start off with credit, and I've defined it in step one actually. I think this is partially my definition in addition to things that I've seen online. So I define credit as the ability of a customer to obtain goods and services before payment based on the trust that payment will be made in the future. What that really means is these companies, if you think about like a credit card company, they are giving you a line of credit, for example, that they're expecting or trusting you to pay back. When you use something like a credit card, that's not your money, that's another company's money, and then you pay them back ultimately with your own money. Credit is something more general than that, though. I just gave the example with the credit card company, but it's something more general, right? It's the expectance that you can pay back something and how well you can pay back your debts and your dues. Loans is another thing, although related. Loans is whenever somebody loans you money, how well you're going to be able to pay that money back. A lot of people will take out personal loans, they'll take out car loans, they'll take out mortgages, which is essentially a loan on your house over the course of even like 30 or 40 years. Student loans, which has become a huge thing within the past few years. And loans are essential for getting through a lot of the parts of lives for students now. I personally took out student loans whenever I went to college. Housing loans, very, very common. Of course, people don't really outright buy their houses very often anymore. Usually you're getting a mortgage. Same thing with a car too, getting loans for all of these things. So your ability to get these loans and secure them at a low, hopefully a low interest rate, is the best thing that you can really be doing for yourself financially. So you're not putting too much money into the actual loans themselves, but you're getting the product that you want over the long term. So whenever the question about credit comes up, it's really consolidated into this one thing called credit score, which is determined by three different companies, but we'll get into that. And what I want you to really start thinking of for your personal financial future is having an idea of your credit score, right? And what that essentially is a determination of a number between, on here they have it as 500 and 800, but I think it goes down to 300 as well too. It's a determination by a company how well you're able to pay back things, right? So there are many factors that go into what can affect a credit score, right? If you have a lot of debt, if you're opening up like a lot of different payment accounts and you're closing them, maybe if you had a loan account over here, you closed it for some reason, you had another account over here, you closed it, a credit card account over here and you closed it, that can look badly on a credit score. A tax lien, which is essentially saying you have something in your possession, but you're still in debt to paying it, maybe something like a car. If you've gone through bankruptcy before, if you made late payments for something like a loan, or if you made late payments for something like a utility, if you buy those for a house or apartment. On the other hand, you can do things that'll get your credit score higher, which will give you better access to what we'll talk about below. Paying your bills on time, having a mix of credit sources. That means that the credit is coming from multiple places. If you have a credit card someplace, maybe if you want to open up a credit card for a specific store, right? You go to, there's a lot of different retail stores. I don't want to mention anyone specifically, but if you go to a lot of retail stores, you can open up a credit card line with them, and that can be beneficial to this. And then showing these companies that you are paying them over a long history, right? So getting access to the credit score, it used to actually be quite a difficult thing to do. But if you go through like a FICO credit score, if you look it up online, you can usually do it that way. If you have a credit card, usually they can do that for you as well too. If you have a bank account or a bank, they can help you out with seeing your credit score. But this is an important line, right? You want to be in these numbers, and the hard thing is it's hard to get into these numbers. You need to do it over time. So that's why I'm including this lesson now, because the sooner you start thinking about this, if you're prepared whenever you're 18, 19 years old, you'll be a little bit ahead of the game by the time that you are ultimately trying to do things like buying a car and buying a house. So we're just trying to be helpful in that way. Okay, so the benefits of a good credit score in this upper echelon up here, right? Better car insurance rate, the amount that you'd be paying, so that if you get into a car accident or something, that the insurance company is able to help you pay for it. Getting an apartment, it's better if you have a good credit score, or a house. Utilities and cell phone companies, usually what will happen if you don't have a great credit score, you'll have to pay like a deposit for a utility. Say you get a new apartment and you want to get the water utility, you want to get an electric utility. If you have good credit, they'll just say, okay, you're good to go. You can start making your monthly payments. We'll have it turned on for you. If you don't really have much of a credit score, they'll say you have to pay a deposit first, and they'll hold that against you. So if you have any outstanding payments, they'll take it from the deposit if it's like $100 or $200 at the end of the time that you work with the utility company. So you have to front money if you don't have much of a credit score. So if you don't have a lot of money just laying around, it can be difficult to get into that game. You might have to borrow from somebody you know, which isn't a great convenience. Lower credit card and loan interest rates. That interest rates is a huge one too. If you're paying a loan on something, you want as low of an interest rate as possible, because that's money going directly to businesses, to banks that you might not have to pay otherwise. So watch this video. This lady is actually great. How she talks about it. She's like a financial manager, and she talks about understanding credit and loans. So I want you to identify and submit 5 ways credit and loans can affect your life. So let's watch this together.
Hi, I'm Jennifer Van Handel, Relationship Manager at Star Financial Bank. I'm going to talk to you today about credit, why your credit score matters, tips to improving it, and mistakes to avoid. A credit score is a 3-digit number that is calculated from the information contained in your credit history, and everyone has one. Your credit score can mean the difference between being able to purchase a home or having to rent. It can also drastically affect the rate of interest that you pay on.
So a few of those you can glean from even up here, but she mentioned them as well too. If you're going to rent a home, if you're going to own a home, if your interest is high or low, those are things that credit and loans can affect.
Any loan you apply for, or even if you'll be given a loan. In simplest terms, the higher your credit score, the less interest you'll have to pay each month and ultimately over the life of the loan, whether for a mortgage, a car, college, etc. But lenders are not the only one who look at your credit score. Landlords, utility companies, and even potential employers may take that important number into account when doing business with you.
Isn't that crazy? In some states, employers will look at your credit just to get an idea of how you are with that, right? Like your landlords as well too, utility companies like we mentioned up here, they all take that into account.
Your credit score may be used to determine the size of a deposit you need to make with the electric company to sign a lease on an apartment. It could even mean the loss of a job opportunity. There are several organizations that provide lenders and other companies with individual credit score, but they all calculate the same way. The FICO score is the best known and most widely used. The range is from 300 to 850. A good credit score begins at 650, with 800 and above being excellent. Individuals with scores below 580 will be considered a poor credit risk. There are many behaviors that can negatively affect your credit score, such as paying bills late, not paying at least the minimum amount due on credit cards each month, having too much debt in relationship to your income, and even failing to alert creditors of a new address or name change. One of the easiest ways to manage your credit is to know your history. The Fair Credit Reporting Act requires each of the nationwide credit reporting companies, Equifax, Experian, and TransUnion, to provide you a free credit report once every 12 months. However, you might have to pay for the numerical credit score itself. But even without the actual score, receiving a copy of your credit report will give you the opportunity to make sure that the information contained in it is correct. If you find errors, you can work to correct them. For more information on receiving your credit report and how to correct errors you find, go to the www.annualcreditreport.com, which is managed by the Federal Trade Commission. If you find yourself in a credit hole,
that's a good tip that she just gave to look through the free credit
which is
report.
managed by the Federal Trade Commission. If you find yourself in a credit hole and you fear you may not get out, talk to legitimate credit counseling, but be aware there are fraudulent companies who will claim to cure your credit problems, but in reality will make it worse on the situation. For information and legitimate credit counseling, visit the National Foundation for Consumer Credit website at www.nfcc.org. Star Financial Bank has a wealth of resources to help you navigate the often confusing world of credit, as well as other tips and various online calculators to make your financial picture clear. Visit www.starfinancial.com/resources.
Cool. And I actually mentioned it a few months ago when we were talking about different scams and schemes. It's important for you to be checking these things right now, too, even if they don't seem relevant yet, because there are certain scams and schemes that involve using clean credit of people under the age of 18, right? They try to use this information, get credit approved for something, and sometimes people don't even know that their credit is being used and their score is being negatively impacted. So I'd say try that out. Go through the Federal Trade Commission on that website that she said, because all these things can affect your lives, even if you don't know it, right? Crazy. It's crazy. So the last thing you'll be doing today in step 3 is you're going to play through this short simulation. It's just a little game with like a credit card. You're going to use all 3 credit cards, make purchases with each type of card, and adjust your monthly payment as necessary with the credit owed. And then once you're done, answer the following prompts. What surprised you about the simulation? What card do you think is the best deal? Explain. And how does interest affect what you can buy and pay for? And what you're submitting is your responses to steps 2 and 3. And I hope you all have a wonderful day.